There's an old saying on Wall Street that goes, when your taxi driver is giving you stock tips, it's probably time to sell. And I'm wondering if this could be one of those indicators. Since going public on July 29th, Robinhood stock has been undergoing a bit of a slaughter, and in the last week, things are looking even worse. After a 12% shave the other day after a dismal earnings, the price settled down to below where it IPO'd at $38 a share. Robinhood, once largely applauded for its massive broad market appeal, was responsible for bringing millions of users, particularly younger ones, into the stock market, and lately kind of into the crypto market as well. With a super easy user interface, the number of accounts on Robinhood exploded until the GameStop drama earlier this year. As an anti-hedge funds shorting companies into oblivion fueled Reddit and Wall Street Bets mob pushed GameStop's share price into the stratosphere, Robinhood actually stopped all of their users from being able to buy any more of it. Though Robinhood wasn't the only brokerage who did so, the backlash has become a lasting stain on Robinhood's once pristine reputation. So in the last earnings report, we saw their MAUs take a hit as users either backed out of the market altogether or made their way over to real brokerages. Anytime this happens, you're sure to see assets under custody decline, which we did across all asset classes, which leads to ARPUs, or average revenues per user, which is a really important indicator for companies like this, get nearly slashed in half. People are disillusioned with Robinhood, and it's starting to really show. And yes, all of that absolutely hit the bottom line, causing the share price to collapse. Another one of the complaints railed against Robinhood is the fact that though you can buy crypto through their platform, you haven't been able to withdraw it or transact with it by doing things like, importing gray market skylines from Japan with Bitcoin. Robinhood's working on that and promises a fix soon, and already has about 1 million users in line for their crypto wallet. But in the meantime, clients are fleeing for good reason. So, in an attempt to make moves to remedy the problem, while also simultaneously hitting the gas on their appeal to a younger audience, Robinhood has made a deal with the king of burgers, Burger King, otherwise known here in Japan as Baga King. In the deal, members of Burger King's hyper-elite Royal Perks Club can earn the chance to get some free crypto when they spend more than $5 through the Burger King app. Prizes will be distributed in crypto to winners' Robinhood accounts. Burger King has assembled a pool of 20 Bitcoin, 200 Ethereum, and 2 million Dogecoin so they can make it rain on their Royal Perks Club members. I did the math for you, and it works out to about $2.5 million in crypto. Depending on how you look at it, that's either a lot of Whoppers they gotta sell to make up for that, or, like one day of work for me, because I'm a finance YouTuber and I'm gonna make probably $2 or $3 billion on this video alone. Now, shout out to this guy, Scott, in the comments section of that original article. He said, I don't know if I could make up a better example of a bubble indicator. And I was thinking the exact same thing when I saw that. And it immediately reminded me of that old saying about the taxi driver. It's like when high schoolers or your barista are like,
dude, oh my God, did you see how much desktop metal went up last night?
Dude, which one of you is responsible for this script? I'm literally about to make a video titled exactly that after this. But yeah, it gives me those same feels. We're consistently seeing the market moving upward this last month, most likely on the solid results of lots of major companies who are just slaying it in their earnings, alongside the hope of supply chain woes starting to possibly ease in the coming quarters. But at the same time, we're seeing all kinds of frustrations in labor markets, particularly in the US, where it seems there's a growing gap in motivations between ownership and worker. This article highlighted the fact that American Airlines had to cancel 14.3% of its flights last Sunday, pretty much because of labor shortages, mostly in their flight attendant roster. And this isn't just a phenomenon that American Airlines is dealing with. It's happening all across the industry, like many different industries, and is one of the more surprising shocks that I think economists and politicians didn't really expect from giving away so much free money for so long. And in tandem with those labor frustrations potentially eventually breaking this market euphoria, China is also getting more and more aggressive in its newfound state of power and influence. This foreignpolicy.com article mentions that in the last few months alone, China has had border flare-ups with India, Vietnam, and Malaysia, not to mention its continued pressure on Taiwan and its allies, hopefully including Japan and the US. They've also threatened Australia with boycotts as well. And just yesterday, the Biden administration made moves to end the steel and aluminum tariffs on European trade partners that were started during Trump's administration. And because China is a massive source of these materials for the US, Freeing up competition is likely to put further pressure on China, though it should ease some of the supply chain issues we've been struggling with. This move caused steel stocks and futures to dip slightly, and for good reason. So what I'm saying is that there's a lot of potential for a lot of really big crap to hit the fan sometime soon. Y'all know I'm in Bitcoin for the long term, but it seems to be hitting some resistance in this last week or so. And I think it's not likely that the king of burgers will push it up through that resistance line anytime soon. And I think it's even less likely that the king of burgers will help Robinhood out of its backstabbing induced plummet as well. If you'd like to check out my own personal top 10 holdings, check out this video. But if you're more interested in figuring out why it seems value investing is dead, check out this video and let me know your thoughts. Love you guys, and don't forget to stay generous.